You gave a recent speech where you said you thought the labor market looked pretty solid. Give me your thoughts on that.
Yeah, I think it is solid. I think relative to where we believe full employment is, the numbers look pretty good. And I think that there was definitely some cooling in the first couple quarters. Since then, literally within the last few days, we've met with folks around the district, and there's a lot more optimism going in the last couple quarters of the year. And so I kind of agreed with Chair Powell at his last FOMC conference that while the numbers seem softer, they seem to be in balance, kind of the supply demand.
Are you seeing in the data at all any impact of changes to the immigration policies?
You probably have to assume that some of the labor data was affected by some of those numbers. I mean, even the administration talks about the successes they've had relative to the numbers and the decline of the numbers from a year ago. So you would think that would be in the mix somewhere. But overall, with the supply and demand and balance, we still came out with a 4.2 unemployment print.
So let's talk about the other side of the mandate, the inflation side. What are you seeing in the recent numbers?
It seems like that last mile is pretty hard. And I'm one of a lot of folks that believe that there is a real hard, true cost to that last percent of inflation that's in the system. I think that we might see a tick up. I would say that it's probably the inflation number is probably closer to 3 than it is 2. And I think we've got some work to do. I think we want to continue to figure out how we keep pushing that number down toward 2.
Markets have big.
Oh, let's stop for a second. You got to listen to what he said. So the Fed's mandate is to lower inflation to 2%. That has been the goal for the last couple years since we've seen the heights in inflation when it comes to the Fed. Currently, the rate is around 3 or a little bit above 3. So when it comes to lowering interest rates, does it make sense to lower interest rates if inflation, one of the most important aspects of the Fed's responsibility, right? You got unemployment and you have inflation. Does it make sense for the Fed to lower interest rates? If inflation actually ticked up a little bit, right? It's been coming down consistently over the last 6 months. But if it ticked up a little bit in the month of July, some people say that it's based on tariffs, right? Should Jerome Powell in September lower interest rates? My initial answer would be no. Why would he lower interest rates if we are just talking inflation mandate? Why would he lower interest rates to basically succumb to political pressure from the president of the United States?